are up and live. And that whoosh sound should have let you know that we are live. How you guys doing? It's Ted here with Bodies and Wicks. Want to see what's up? It's Sunday. It is end of the week for crypto week, beginning of the week for Forex week. Got a lot to talk about. Good thing is that this is probably going to be a pretty quick show. And the reason it's probably going to be a pretty quick show is because I did all of my analysis ahead of time. Most of the time, my analysis does not get done until I'm actually sitting in front of the computer. So first, I wanted to start off with indices, right? And then I want to go toward crypto. And then if we have some time, I would like to get to know some Forex going out of all you people, and then that would be absolutely phenomenal, because then we could cover all three of everything that is going on and not have to worry about anything else. So anyways, what I want to do is go ahead and open up. Well, first, I shouldn't mention what I do. I am a smart money strategist. What that means is I like to play the big guy, right? So there's people with money in this world, and they like to control the balance sheet. They like to control the money. They like to control how the ups and the downs go. They like to control how the flow of the manipulation or flow of money goes through, in and out of all of these equities and all the coins and everything, especially if they are big time. There, those big drops that you see in the market, if you think that's just some guy with $1 million hit and sell, you're wrong. That's some guy probably with about a couple billion hitting sell. The reason they're doing that is so that it can get cheaper, so that way they can buy it up at a cheaper price and make more money that way. It goes up higher. And so that's the game they play. The game they play is to make sure it gets high, sell high, make sure it gets low, buy low, and then keep going the same thing. Or if you're in a bull market, you're in a bear market, they're going to do the opposite. They're going to sell extremely high, they're going to buy when it's extremely low, and they're going to wait till it gets to a good point to where they can sell. It won't be a point to where they want it to be since it's a bull market, but it's going to make them money either way. So that's what I do. I try to teach people about things like that. If that's something you want to learn about, please, what I would like you to do is do some cool things with my graphics and go ahead and smash that like button, smash that subscribe button, and we can teach you all about these kind of things. So first, let's go ahead and go on to opening of everything that is going on, and let's just go ahead and transition over. So what I have here, and I'll move it over here so you guys can see. First, like I said, I'm going to go toward the work. Of course, as soon as I would try to get some things going, it would just crap out on me. I know I should have just. Okay, so this is the SPX 500, and as you can see, I am on a 1 hour chart, and let's get on a 4 hour chart really quick just to see what kind of danger or what kind of things we're looking at here. And so the thing here is, right now we are at this price before the door opens, right? And I haven't called up here. I even have a box up here that says short. I say short because there is a in the 5-minute chart I'll show you. It's because that is the last place that it gets to its high point before it hits a bearish order block. So I mean, by bearish order block, it means that there is a specific block, and I will get myself off the way so you guys can hear me instead of wonder what's going on behind my head and I'm hitting the wrong buttons here. What we're gonna do, we're gonna hit this, and we're gonna hit Logitech, and we're gonna hit this. There we go. Now I am on the right spot. Now wait, you see me? Oh, you don't have to see me. So what is happening right now between the SPX, right? So we had this big drop below, right? Had this big drop below. It attacked the sell side liquidity right here, right? The other part would be to try to attack the sell side liquidity right here. I don't think that's going to happen because it would take a lot of energy to do that. So I just don't think it's going to happen. So instead, what I think is going to happen is, if we look at this from a practical view, of course, you want to sell high, right? And if you want to put a Fibonacci on this, which I love doing Fibonacci's if you don't know, because they tell you exactly where discounts are. Now, smart money loves discounts. Just like your brand name shopper, your no idea what this is. Let's get rid of that. There we go. That's the Fibonacci. Right. So there's two things about what is going on. I don't think it's going to try to attack this low side liquidity. Don't think it's going to do it. There's too much. There's just too much. It's already spent too much time down here. This is accumulation right here. This is accumulation trying to get all the orders accumulated so it can get above what it needs to do. Now, it did come back down for a quick peak, just so people could grab a little bit more accumulation so it could go up, right? So that accumulation did go up. We have equal highs. It breaks those highs, then it continues moving forward. Now you can see it comes up here, and look, it makes exact equal highs. That means, well, I don't, is that exact equal highs, or is that just something I put? That is just something I put in my bad. To get exact equal highs, it would have been something like 3 points or something like that, which isn't much. So SPX has this thing of liking to break highs and then pulling back really hard, right? I don't know if you noticed that, but SPX, that's what it likes to do. It likes to try to break highs and then pull back really hard, and then didn't try to break this high at all, but did set up a stage for it to drop, you know, and then accumulate down here, right? And so now that it's coming up here, look, boom, came up here, boom, got a high, boom, got another high, came back down, and then boom, broke it. As soon as it broke it, boom, came back down. Okay, so I put short right here, right on this little rectangle here. And the reason I did that is if we can get down to the 5-minute, I knew it's the right way. So got up in this area, and the reason it got up in this area is because of basically your order flow. That's the best way to put it. So you have your down step order flow, and so once it comes up into this down step order flow just above those highs, and see starts dwindling here. Once it gets just above those highs, boom, that's where it makes its move. So now if we look over here, got to about that same exact spot, got a little bit above it, then it broke the high, and boom, it pulled backward. Okay, so what does that mean for now? That mean for now? Well, there is a 1 hour fair value gap, right, in this area. Okay, so I would be watching it going toward this area. Okay, it's going to start going down. I personally believe it's going to start going down toward this area because it's going to try to get a cheaper price. That way they can hedge it and either hedge it or just get a better price and for their portfolio and trading. Get this on back on the hour. Right, so but the thing is that whenever you look at this like this, the only problem is that hedge or that area is not down into where you want to buy. You want to buy somewhere around in here, anywhere in between the 62% and about the 88%. That's where you want to buy. That is what is called just basic economics. You want to buy something off? Yeah, of course you do. 100% off? Yeah, of course, 100%. Why not? Buy that. So what I am looking for, and the thing is that there's really nothing here that would suggest it could get below these levels, except for these equal lows. These equal lows could be the key for the price to drop, right where we want it to go. So if it gets below those two levels, all right, I'm trying. out here. If it gets below those two levels, this is going to be a perfect spot to buy between 41.37 and 41.35. Now, I don't know. I mean, SPX has been all over the place lately. I mean, some days it'll just be doing this and you have no idea, then all of a sudden it just boom, it drops. And it's at a weird time of the day too. Like, look at this, it's at 1 o'clock in the day. Like, how you expect how you expect something to happen when it's not necessarily the advocate of the price time and price validation that you're taught. You know, whenever time comes first and and then the price comes second. So time is the most important thing, right? So if it's not at the right time, then the trade is not going to be there. So it has to be at this right time. So 8:30 comes, who knows, this thing could blow right through this thing and hit this thing by 9:30, 10 o'clock. If that's the case, buy. You know what I'm saying? If it's 8:30, I mean, we got a long night ahead of us, you know, so it'd be dribbling and dribbling down, and it could come up to this, could hit halfway through, and then come back up and act like it's gonna do something, turn around and come down, and come back through and hit this area again. I am not for sure, but this is the dilemma I am waiting for. Or it could do absolutely nothing. It could just kind of meander and fall and do this and do, and I'm sure, but eventually it is going to go down, and then after that it is going to go back. I do know that, because it's going to try to break its old high. It's going to try to break its old. That's what they do. What the hell just happened? Not daily effects. Back. I want your economic calendar. I want to go back to trading view. Sorry guys, sorry for that. Oh man,